Welcome back to the Investing Talk podcast. Today, we're going to be taking a closer look at Upstart Holdings,
Okay.
ticker symbol UPST.
Yeah.
You've probably heard the buzz. They're using AI to shake things up in the world of
Right.
lending. And with their Q4 and full year 2024 earnings report
Yeah.
coming out tomorrow, February 11th, we figured now would be the perfect time to really dig into what's going on with the stock.
Absolutely.
Yeah.
We're going to take you through the recent price action, which has been pretty wild, and then we'll explore the big picture trends that are really shaping Upstart Holdings' future.
Okay, so let's start with what's been happening with the stock price. It closed at $70.87 on February 10th.
Okay.
But just taking a quick glance back over the past year, you can see it swung
Yeah.
between $20.60 and $88.95.
Wow.
What's going on there?
Yeah,
That kind of volatility
pretty big swing.
is enough to make even the most seasoned investor a little nervous.
Well, it certainly highlights the risks and the potential rewards that come with a company like Upstart Holdings. And you're right, that price swing is pretty dramatic. The fact that it's currently trading near the top of that range is naturally going to raise some eyebrows. Is it overvalued?
Right.
That's the question a lot of people are asking.
And when we look at the technical indicators, it seems like we're getting mixed signals.
Okay.
Some are pointing up, some are flashing warning signs. Can you help us decode all that?
Absolutely. Let's start with the good news. The 50-day simple moving average, or SMA, sits at $69.35, and the 200-day SMA is at $43.37.
Okay.
Both of these averages are below the current price, which usually suggests that we're looking at an upward trend that has some legs.
So if we're thinking long term, the trend seems to be positive.
Yes. And we can add another point to the positive column. When we look at the moving average divergence, or MACD, the MACD is basically a momentum indicator, kind of like a speedometer for the stock. And right now it's giving us a bullish signal with a positive histogram that's essentially confirming that upward movement we're seeing.
But you mentioned mixed signals. So there must be something else going on here too, right?
Right. There are a few things that might give investors pause. For instance, on February 10th, we saw a shooting star.
Okay.
Candlestick pattern. Now, if you're not familiar with candlestick patterns, they're visual representations of price movement. And a shooting star,
Yeah.
well, it often hints that a downturn might be on the horizon.
Okay, so like a warning sign.
Exactly. And then on top of that, Upstart Holdings is trading pretty close to the upper Bollinger Band, which sits at $71.57. Think of Bollinger Bands as kind of like guardrails on a highway. When the stock price gets too close to the upper band, it might be a sign that it's moving too fast and could be due for a correction.
Interesting. So maybe the stock is getting a little ahead of itself.
It's possible. And there's one more technical indicator we should look at. The average directional index, or ADX. The ADX measures the strength of a trend. And right now, it's pretty weak, sitting at 12.32. So while the price is trending upwards, the power behind that trend might not be all that convincing.
All right, so things are a little murky in the short term. Longer term trends look more positive, but there are definitely some warning signs flashing.
Right.
But let's move beyond the charts for a minute.
Yeah.
Upstart Holdings is making waves
Yeah.
with its AI-powered lending platform. And let's be honest, it sounds pretty revolutionary.
It is a very innovative approach,
Yeah.
and they've been racking up some impressive partnerships. We saw Sandia Area Federal Credit Union and Pelican State Credit Union. Both choose Upstart Holdings for their lending needs.
So they're gaining real traction in the market.
Yes, they are. But here's where we need to inject a dose of reality. Despite all the excitement around AI, Upstart Holdings is still struggling to become profitable.
Okay, so how big of a concern is that?
Well, their earnings per share, or EPS, is currently negative $1.91. And their forward price-to-earnings ratio, or PE, is a whopping 270.05. This tells us that the company's valuation is very high compared to its current earnings. Basically, investors are banking on a lot of future growth.
So with the earnings report coming out tomorrow, there's a lot riding on those numbers, right?
Absolutely. Analysts are projecting earnings per share of negative $0.05 and revenue growth of 28.33% year over year, which would bring them to $180.06 million. Those are some big numbers, and you can bet the market is going to be watching very closely to see how Upstart Holdings measures up.
Yeah, it sounds like it could be a make-or-break moment for the stock price.
It really could. And here's something else to keep in mind. Upstart Holdings isn't operating in a vacuum. The broader market conditions and the overall economy, they play a big role too.
That's true. It's easy to get caught up in the hype surrounding a specific company and forget about the bigger picture. What are some of the things investors should be paying attention to right now?
Well, for one, we've seen the technology sector as a whole underperform in January of 2025. A lot of analysts are pointing to increased competition from low-cost AI solutions as one of the factors. That's something Upstart Holdings is going to have to navigate.
Right. It sounds like AI is becoming more accessible, which could pose a challenge for Upstart Holdings if they're trying to position themselves as the premium player in the space.
Exactly. And then there's the Federal Reserve's decision to pause rate cuts. That's going to have ripple effects throughout the economy. And for a company like Upstart Holdings, whose business model is centered around lending, it could make things more complicated.
Can you explain that a little more? How exactly would that impact Upstart Holdings?
Sure. Think of it this way. If interest rates stay higher for longer, it becomes more expensive for Upstart Holdings partner lenders to access capital. And that could potentially slow down loan originations, which would directly impact Upstart Holdings revenue.
Okay, that makes sense. So we've got this mix of factors at play. Volatility in the stock price, mixed signals from the technical indicators, a company that's pushing boundaries with AI, but also facing profitability challenges, and then this uncertain economic backdrop. It's a lot to consider. So what does all of this mean for someone who's thinking about investing in Upstart Holdings? Where do they even begin?
That's the million-dollar question, isn't it? Well, I think it depends on your individual investment goals and your risk tolerance. There are a few different approaches you could take, each with its own set of pros and cons.
Okay, let's walk through those. What are some of the options?
Well, one option is to look at Upstart Holdings as a short-term trading opportunity. With the earnings report coming out tomorrow, there's a good chance we'll see some significant price swings. A savvy trader might be able to capitalize on that volatility, but this approach is definitely not for the faint of heart. It requires careful monitoring of the market and a willingness to accept some risk.
So high risk, high reward.
Yeah.
What about a more long-term approach?
Right. If you're more of a buy and hold investor and you believe in Upstart Holdings' long-term potential to really disrupt the lending industry with A, then you might consider it a growth play. The thinking here is that even if they're not profitable yet, their innovative technology and growing list of partnerships will eventually lead to strong financial performance. Of course, you have to be comfortable with the volatility and accept that there's no guarantee of success.
Okay, so we've got short-term trading for those who like to ride the waves and long-term growth play for those who believe in the company's vision. Is there a middle ground?
There is. Some investors might be excited about Upstart Holdings' potential, but feel hesitant about jumping in right now, especially given the current valuation. In that case, they might choose to wait and see what happens. Maybe wait for a price correction before buying in. This is definitely a more cautious approach, but it could offer a better entry point.
Right, sometimes patience pays off in the market. So 3 different paths, each catering to a different investor profile.
Exactly. And it's important to remember that all of this is happening within a rapidly evolving technological landscape. AI is changing the game in so many industries, and lending is no exception.
AI is the big wild card here.
It really is. And that brings us to a crucial question for investors. How much of a premium are you willing to pay for a company like Upstart Holdings that is at the forefront of this innovation? Are you willing to pay a higher price now for the potential of future growth, or do you want to wait for more concrete evidence of profitability?
That's a really good question.
Yeah.
And it's one that each investor is going to have to answer for themselves
Yeah.
based on their own individual circumstances and risk tolerance.
I completely agree. There's no one-size-fits-all answer when it comes to investing.
Yeah.
We've seen AI create tremendous value in other industries, but we've also seen how quickly things can change. So
Right.
I think a healthy dose of caution is always warranted.
I think that's great advice. So to bring it all together, we've been talking about Upstart Holdings. Ticker symbol UPST. They're pushing the boundaries of what's possible in the lending space with their AI-powered platform. But they're also facing some significant challenges, including profitability concerns and an uncertain economic environment.
Right.
Sounds like there's a lot of potential here, but also a fair amount of risk.
That's a pretty accurate summary.
Yeah.
I think the big takeaway is that Upstart Holdings is a company that investors need to watch closely, do your research,
Yeah.
understand the technology, the business model, the competitive landscape,
Okay.
and the potential risks involved. Then you can decide if it's the right investment for you.
I think that's a great note to end on. We always encourage our listeners to do their own due diligence before making any investment decisions.
Absolutely.
But we've covered a lot of ground today about Upstart Holdings. If you enjoyed this episode of the Investing Talk podcast, be sure to subscribe so you don't miss any of our future episodes into the world of investing. And if you found this episode helpful, please share it with your friends and leave us a comment. We always love to hear your thoughts.